After Tesla stock has been soaring like crazy this year, our modern day Tony Stark, Elon Musk, now has an estimated net worth of $70.5 billion. This surpasses famed investor Warren Buffett and Google founder Larry Page. But this is still a long shot from his fellow billionaire tech peers like Amazon's Jeff Bezos, Microsoft's Bill Gates, and Facebook's Mark Zuckerberg. But to be fair, billionaires like Warren Buffett and Bill Gates have dedicated to donate a lot of their wealth over time and have cashed out from their investments. So if you adjust for donations, then Elon Musk still has some room for improvement. But for him to get to where he is today with his businesses in such a short time really makes you rethink about what makes a company nowadays become a superior investment. Warren Buffett always talks about investing in companies with castle-like moats, which is referring to their defensive, competitive edge that makes them impenetrable to the competition. Something like Coca Cola's brand or Disney's reputation makes it hard and expensive to compete against them. But the fact that Elon has gotten his wealth to such a level that matches Warren Buffett so quickly, he must have done something right with running companies and might have some insights on investing. And although there's currently $20 billion in bets for Tesla to fail, here's what Elon Musk thinks about investing.
First of all, I think moats are lame. They're like nice in sort of quaint, vestigial way. But like if your only defense against like invading armies is a moat, you will not last long. What matters is the pace of innovation. That is the fundamental determinant of competitiveness. And for any given company, if the rate of innovation, let's say like competitors, maybe they come out with something new every 6 years. We're maybe every 2 to 3 years. So if our rate of innovation is, let's say, twice that of any given competitor, then it is simply, this is true of generally of companies in any industry. Whichever company has the highest rate of innovation, unless that company is actively killed by its competitors in some way that's nefarious, or shoots itself in the foot, it will at some point exceed those competitors. Like this was obvious that this would occur with Amazon or Walmart because Walmart's rate of innovation was negligible and Amazon's was very high. The outcome was obvious a long time ago.
And here's Warren Buffett's response. Certainly you should be working on improving your own moat and defending your own moat all the time. Elon may turn things upside down in some areas. I don't think he'd want to take us on in candy. There are some pretty good moats around. Warren Buffett owns See's Candy. And here's Elon's response again. I'm starting a candy company, and it's going to be amazing. I'm super serious. Then I'm going to build a moat and fill it with candy. Warren B will not be able to resist investing. Berkshire Hathaway Kryptonite. Saying you like moats is just a nice way of saying you like oligopolies. Okay, for the sake of argument, what do you wish for in candy? Crypto candy. And here's Elon's first release of his candy. For those that don't know, Elon is actually a Canadian citizen and attended Queen's University in Kingston, Ontario, before going to the US. His net worth today converted to Canadian dollars would be $95.5 billion. That almost reaches the size of TD Bank and is higher than CN Rail. His current net worth alone would make him Canada's fourth largest company. But Elon Musk is an outlier, and most Canadians won't ever get to his level. In fact, the most recent update on the net worth distribution in Canada is like this. The top 20% of households, those with net worths over 1 million, own almost 75% of the nation's wealth. It's basically the same as saying that the bottom 80% of households, or those under 1 million in net worth, or 38.3 million people out of the 37.9 million Canadian population, only collectively own 25% of the nation's wealth. I thought these numbers were interesting, and it really speaks to how big the difference in wealth is in Canada. If 80% of the Canadian population suddenly disappeared or went broke, theoretically speaking, if no other factor changed, only 25% of the nation's wealth would be wiped out. But of course not everyone is suddenly born a millionaire, and people grow into their career and wealth as they age. Here's a breakdown of the net worth needed to be ahead of 80% of the people in your age, and also what the median net worth is. You'll find that the gap is pretty wide. Here are the same numbers in chart form. Besides checking where you are on the chart, which for the age of my audience is usually around here, these numbers also tell me that half of Canadians by the end of their lifetime or retirement have a net worth that stagnates at around $300,000, and the top 20% of households end off with just slightly below the $1 million mark. But for households, which are normally two people, like a married couple, it's typically those at age 45 and up that are the top 20% of households that manage to combine their wealth and hit the $1 million net worth level. And going back to our previous distribution, these are the type of people who own over 75% of the nation's wealth. So that's all for now. If you enjoyed this video, it would help me out if you click the like button and subscribe to my channel if you haven't already. Let me know in the comments below what your thoughts are on the wealth distribution, and I'll see you next time.